Hi everyone. Today is 2nd September. Okay, so the last month ended with a drama. It was going well, but towards the end, it was really bad, or I would say surprising. However, it has survived, so it's very disappointing, frustrating, and of course the boring. But it's not losing its strength at this moment, and there is no immediate threat, though it has to be washed out with respect to the critical support too. But this is not a threat at this moment. That is the summary to start with. So we are at a lower time frame at 5 hours. First, a quick recap, because it is important sometime that when we talk about the present, we don't realize the importance of the information sometimes, or we may sometimes take it lightly and ignore some facts. So some retrospective analysis is important. So if you look at this one, we had highlighted this is the heavy resistance and indicated that the green line, this the price must close about this. So this is lower time frame. We talked about at least daily closing, which didn't happen. And the consolidation was in horizontal map. When we got this drop, we had this support added. And then the consolidation was no longer on horizontal, but more on a downside. That was not an issue because it happened in past as well. If you look at the prior one, this was also descending. So until this one, we were looking at the range bound movement, and then this orange line was added sometime here and indicated that this orange line is the immediate resistance, which it has to be broken about. And then we had this first milestone, second milestone, and then there was a third milestone indicated that these are the key resistance that it has to break apart. It tried to break apart the first one, but it failed. Especially here, this is where I had highlighted that because so many attempts and already touching these supports was important. So this support became very critical. Right? Definitely 2940 was the immediate one. But this was even more important, the 28,850 level. And so somewhere over here, I had highlighted that, see, this is failure and provided this support. Price supported, I mean, the support worked for a while, but not for long. And then we had a deep down move. Even after this happened, I realized that it was above the critical level, support level, and it didn't break below the key support, the support tool. So though this was very, very bad, it was not a threat to the recovery attempt that we are seeing since December. And this is important. So what happened is we had a very nice position, the best position, and then this was a good position, right? And then this is not so bad position. So this is how we have graded. And of course, if this is broken, if this is broken, then that I would call as bad, but not necessarily the worst. Right? The worst could come if it breaks below 23K. That is the last support for me. When I say last support means the price could go down up to 21K as well and go up. But the point is going that will be tracked under the downtrend, not under the recovery attempt. My recovery attempt started in December, which we'll see on a zoomed out time frame. Hi, but so I'll continue my thought on recovery attempt and why this level is important. And we'll talk about a scenario, other alternative scenario, because it's here. But let's understand at a lower time frame what is really happening here. First of all, I see a fractal. What is fractal? Fractal basically is a pattern which repeats in itself. Sometimes the size gets bigger and sometimes the size gets smaller when the next shape comes up. So basically, if you look at this particular portion, is the is the fractal, and this is a bigger fractal. So basically, you can say this is a fractal of this one and an enlarged one. So again, this particular point is only for those who are interested in TA, not necessarily this is for traders, but those who are curious would love to see this. That this is a fractal, and in fact, if you go even lower, then you could see the shape even better. It's basically this particular piece that you see. So in this, in nutshell, what this has done is it has reset. It has reset the game basically. So this particular piece that you see is an enlarged version of this one. So this particular move actually reached the level. Which one? The immediate support, which is the which was the resistance. Remember during the consolidation, right? So it had touched this one, which was very encouraging, and we said the next attempt would be positive because if you look at the first attempt reached to this level but not able to break above, then it retraced but not quite able to break below, which was good thing. And then there was a second major attempt. If you look at this one, and we said, okay, now this is very encouraging. That means it doesn't want to go down. And then it took its time, few hours here, consolidated, and there was a big bump. Now, why this pump? I mean, of course, there was some news and also the XY dump. So multiple reasons. I would wait more on the PXY. Um, it's not about knowing the exact reason because sometimes the reasons can be multiple. But I would say the DXY is the most important factors, which I had highlighted in last week, if you remember. So I said 2 weeks. So that means this first week and the next week are the most critical weeks because the DXY is at a level where it will decide whether it will continue going up or fail. Okay. And I had posted a chart as well. I mean, and explained. We'll go through it again. So DXY is the most important, though there was news about ETF and all. I get it. But both DXY and that news was together. So it's very hard to find which one was the main reason. For me, DXY has been a key driver for last few days, and that is the main reason. And we'll also see this dump happen because the DXY, this particular dump happened because DXY pumped. Okay. And we'll look into DXY right after this one. So we'll just prove a point. Anyway, so this attempt was amazing, but look at that. Now prior support becomes resistance. Remember, all the prior supports are now resistance. So when the price moves up, all these supports are going to act like resistance. So you can say this was an ugly drop. Then this attempt was successful. This was successful attempt, but this was pushed back. Now when it is pushed back, look at this particular support now acted upon, and then there was a retrial. You see the retrial, there was an attempt for recovery here, but it failed. So what happened is second time it tried to defend for a while, but not quite able to hold it. That's what happened. So supports are always support and resistance are so important that they play their role, and sometimes they can really fight hard, defend hard in this case. So, but sometimes if depends on the force, it may not last long, and that's what happens. But it always gives you some time. It always provide opportunity to plan. So when you look at low time frame like 2 hours, you can see the structure and see what really happened. So you're kind of dissecting and try to understand what is really happening and what has happened recently. So I think this is clear that this was an amazing attempt all the way to this support level, but it failed. Now it has gone down. We know that, but look at that. It has stopped here. So again, this low is not broken. This low, so this is the lowest point. This is higher low, and this is more or less the same low. I would not say higher low, but okay, same level. So this move has reset the gain we had over here. Now it's here. This is consolidation. So this is weekend, as you know, that the way BTC is moving is trying to take clues from the macroeconomics and mainly the XY in my observation and analysis. So BTC is unlikely to make crazy move on weekend in absence of the XY. Okay. This one interesting thing going on, which is like altcoin. Altcoin are making move a big, and that is very interesting and surprising. I, of course, it's positive, but that's very encouraging for sure. The altcoin are actually heading up, if not in a big way, but they are not. They're basically outperforming BTC in most of the cases, which we'll see in a while. But this is very encouraging to me. So how next week starts is something we'll see, but at least uh, at least there is no immediate threat, and you never know if BTC can start moving up and try to reach again at 27K, then that will be very positive, right? So what is our immediate requirement? Our immediate requirement from BTC is to close above. Remember, close above. A daily close would be good. A daily close above critical level one, which is let's say 27K. Okay, 27K will be a big win. Though I would not say it has to cover this one as well, but 27K closing a daily close about 27K, I would be very happy and satisfied, to be honest. Because later on, I don't care whether it takes 1 day or 1 week to break above other level. It doesn't matter much. Right now, I think the most important requirement is this critical support to is not broken, right? You know the reason, because if that happens, then the whole structure becomes more fragile and weaker. So we don't want that to happen. So the immediate requirement is to close about 27K. Once it does, I would not see any challenge. Though all resistance cannot be ignored, remember, because when this was broken, this has rejected. So I'm not trying to say that once it gets 27K, that means you close your eyes. This is not what I mean. What I mean is, if it closes about 27K, that means there is no need to think about downside move. And even if it breaks below later on, we have time. Right now, it is close to the support level two, critical support two. That's why if it makes a big move, then time may not be enough. But once it's about 27K, there will be enough time to handle it. That's why. So that's a immediate requirement. And looking at the structure, I think it's holding up pretty well. So now it's all about making a big move and closing about 27K. So let's look at 1 day time frame. What do we see? This is a little cloudy because there's so many symbols and drawings. So maybe I'll just hide for a while and show you. Now this pattern is a reset pattern. So if you look at this pattern, I mean, let me try to use Coinbase chart because it doesn't have drawing. Yeah. So we had said it could take off from here or it could take off from this region. This is what we said. So I'll not change this. Maybe I'll just move this. It could take off from here or it can take off from little lower. But yeah, right now. Anyway, so what is the pattern here? I think I can just remove this one. Now, this is not head and shoulder. If somebody is saying this is head and shoulder, then I don't know which kind of creature that person is tracking, because this head on the left, sorry, the shoulder on the left hand side. If somebody is saying this is head and this is shoulder, and then I think, I don't know, that's not the right way, because shoulder cannot be that high. There is ratio. This is not qualified for that. So I would simply say this is it's a pattern, symmetrical pattern, which you could see on this closing price. So potentially what we could see is a symmetrical movement on the upside, like this. This is a scenario. Basically, this is a centerpiece, and then price will move in the symmetrical manner. So this is a scenario, provided this is not broken. Remember, provided this is not broken. So of course, if this is broken, then it will look for the lower level. I must add that as well, otherwise you think I'm biased towards this. No, this arrow starts below support. So as long as this price is above this range, 25K, the green arrow matters. I would mark this as dotted, indicating lower probability, and this is solid, indicating higher probability. And remember, the start of this is below this support, so below 25K or something, below this. So that's important. Okay, so this is the pattern that I'm seeing on one day. We have seen the low time frame patterns. This is a high time frame pattern. Let's look at the weekly pattern. Now, this is similar to what we have drawn one day. Now at this moment, people are extremely bearish, and I would say we don't have to be bullish either, unless it starts coming to this 30K, 29K plus level. Right now, it is right on an edge. And when it is on an edge, there is no need to assume. People also assume a lot, um, because mind wants decision. Mind doesn't want to be on a balanced state. That's the challenge with the mind. If you look at it, so we tend to do always say that guy is good, that guy is bad. So we always try to take side. You can see not just in trading, in our daily lives as well. Look at that. You will always try to say this is good, this is bad. So always like try to distinguish. But we we have to develop, especially in trading. I cannot advise on the likes, but on in life as well, it's similar. You can be neutral and say, okay, that guy was bad, but he's something doing something good, so he can be better, or he can change to something good, for something good, and vice versa. So that neutral approach is very important, and subjectivity is important. That sometime the recent trend in this case was ugly, but we have to see where it is. Okay. So, but as I said, the mind is very, very, very tricky. It always wants to take extreme side. And right now the sentiments are bearish. And that is also because when the expectations were too many, then and when this kind of a drop kills those expectations, the frustration reaches to the peak. This is one of the reasons that I have experienced that. Expectations are number one killer, remember. Now it's very hard. Someone might say, when I say expectations are killer, it doesn't mean that there should not be expectation. What I mean is the desired outcome, the desired outcome is the root cause of everything. So for an example, I can expect that price could go up, but if it doesn't go up, that means the result or outcome is not desirable. Then I should accept it as a fact and see what is the real situation in the present. I mean, this is equally important in each and every major decision, not just in trading, in my opinion. There's nothing wrong in expecting, there's nothing wrong in dreaming. But when the reality hits you, you just have to accept the reality. And while accepting the reality, you can say, okay, how bad it is. Okay, so you're expecting something good, but doesn't go that way. Something bad happens, and then say, okay, how bad it is. Okay, is it recoverable? Is it like out of our hand? And that's how the so that's why the present will tell how bad is the situation. So in this case, the drop continue right from this top. If you look at it, right, drop continue right on from the top, and it's not stopping, and it has already reached this level which was already there, but it hasn't broken yet. So the present is telling that the level is not broken. Now this is not about being optimistic. There's nothing to do about being optimistic or being pessimistic. This is simply to go with the present and go with the key level, where the present price, the current price with respect to the key level is the ultimate guide for us. And we always look at the recent trend and try to see the behavior. So what I was talking about earlier, that this recovery attempt started in month of November actually, but realized only when it pumped in January. So we cannot say November we knew everything, but yes, or in December we definitely called out that there is potential upside move, and then we got this big one in first week of January, right, or early January, and that's where it announced that it wants to go up. Formally announced. Here it indicated, but here it formally announced. And of course, this drop was due to FTX. So remember, there can be some negative event that can bring down price. In my analysis, this particular move that we have seen could have happened here in month of October or starting November if FTX would not have happened. This particular drop was purely driven by FTX. So what happened is, technically there are cycles, macro cycles, but sometimes there could be deviation. Like another example, a classic example was this one, where the bear the this was the bottom for the prior cycle, and this was the retest, and then it was going up, and this was the first major retracement, and this was going up. If COVID would not have happened, then we would not have seen this one, you see. So this is deviation. Now this is like, as I compare with some character comes in a play out of nowhere, and play some role, but not necessarily they will change the play. Okay, so that kind of scenario, and we had to handle it. Now, so this particular upside move that we have seen from here in the month of September 2020, probably we would have seen this wave, this particular wave from here. So this whole entire thing was a detour, digression, waste of time. But that was a situation, a global situation, so we cannot do anything about it. So what happens is that there can be some situation which is not about crypto fundamental, but a macro factors. And those macro factors play a role, and how long they last depends on that. We can see the effect of those factors. So then we had nice run, and look at this was the first retracement, and this was about to go new high. But what happened? The Fed decided to raise interest rate and stop QE, quantitative easing. So of course that was a big factor, and we had covered in past that why it was so important. And then they continue pumping rates. So of course, because the whole market require credit money. I mentioned whether you take an example of Sailor or anyone, the major buyers do not have cash. They buy on credit. Like what we want to purchase house, very few people can buy on cash. Most of us we buy by taking loan or mortgage debt basically. And you know that when you take mortgage, right? And if the rates goes up, if the rates are floating in nature, not fixed rate, what happens? You get into pressure, right? And then basically your buying power, you lose buying power. So house is not something you can sell in pieces. But there are a few friends that I know who had to actually sell their home. But in crypto or any liquid asset like crypto, you can always sell some, asset. And that's what happened. When the interest rate went up, they had collateral and they had to sell them and basically make sure that they are not, liquidated. And many of them got liquidated as well. Essentially, when the interest rate went up, it was not profitable for them. So they had to let go of their position. And that's what happened. And then basically we saw this pattern. So what I'm trying to explain is this was a long lasting effect because of the Fed's policy. This was a very short term effect because of FTX sell. And this was like a medium category due to COVID. So what I'm trying to establish here is there are macro factors, right, that can be very short term, like a month or week. There can be a factor which can for a day or two. There can be a factor which lasts for months. There can be a factor which lasts for a few weeks. You see? So what we have to identify that what are the major factors that are really driving the price or creating cycles. And we focus on them. That's what I do. Small ones, we cannot, we don't have to pay attention a lot unless aggregated effect, turns out to be risky. But small events can be ignored as long as the supports are not breached. Because if you are very sensitive about small events and news, it will not, I mean, it will be very tough for any traders, let me tell you. This is 24 by 7 market. There are going to be events. And if you keep on paying attention to news every day, it will really hurt you. And it's not good health wise, even health wise, it's not good. Mental health, even physical health eventually. So in crypto, we have to be very, very smart about trading, not just about making money and all, but it's also about our health. That the market should not override our emotions. That's why you will hear me talking about emotions a lot because I mean we take it sometimes lightly, but subconsciously, if we are getting hurt or emotionally driven by this market sentiments, then it affects our health in a long term without knowing sometimes. So we have to be very, very very aware of and cognizant about these factors. So coming back to our chart, the price level, the supports are very important, resistance are important, and some small events need to be ignored and try to live in the present, try to assess how the current situation, because the present is the real guide. Okay. And I'll keep repeating because sometimes I really have to hammer because um someone like I'm not saying you have to buy my arguments or logic You don't have to. But when I strongly believe, I have to keep repeating because and things that work for me, I believe it can work for many. But there are a lot of there's a lot of misinformation about many things, trading and TAM. So sometimes we become a minority, and minority need to be louder. That's why um I try my level best to repeat certain things to make sure that we don't forget the fundamentals. When I say fundamentals means best practices, fundamental practices. Okay, so the green path remains as it is. Remember, there is one white line which I would highlight by zooming out. Um, let me did not this white line, but I'll draw one white line. So let me draw one thing for your. Let me use base because it has not many. Yeah, it's really clear. I think I can remove this one. So remember this line. I'm not sure if you are tracking this, but I would insist you track it. This is a magical line. A single line. Remember, this is the low. This is the COVID retest. And I'm tracking closing price. And this is low. This is a magical line. Okay, you can call this, in fact, this, I should say this a magical line. I truly believe. Like, this is for fun, but this is really a magical line. Now, price is here, and the whole entire, so we are talking about this trend, and this, again, each, I explain, I would not, but I'll recap it. Each support is where you take care of your position. That's the whole idea. Each support is like a stepping stone, like a stair, and you take care. So if price is going down, one trader can reduce risk by reducing size each step. And the opposite when there is opportunity. Each resistance is a stepping stone on the higher side. This is the very, very simple strategy. People are not following that. When the price started dropping, each support was a stepping stone. So you when it reaches to 15, reach to 15K, you're not surprised and not regretting, hey, I should have exited not at 60K, at least 50K. You don't regret it. Why? Because then you are taking care at each support. So that's how it is. This is swing trading. It's simple. So swing trading is not about buying at a rock bottom and exiting at a right and top. That's not it means. It simply means you start buying at a low, but not you're not aware that this is the absolute low, or you're not aware that this is absolute top. You will come to know retrospectively. So the smart swing traders don't put don't sell all here, even though there is a chance. And smart traders do not go all in because let's say you assume that it here, then there is another leg down like that. If you assume that this is the breakdown, then there is a leg up. So you don't assume that this is it. So that the incremental approach allows you to make little mistake, and it could actually absorb your mistake. That's the that's the real reason why incremental method works. It allows you to absorb mistakes. When I say mistake, is means what? Means even let's say if you put if you don't go all in here, but some. So your loss is limited compared to all in. And then you can buy with the rest and then say, okay, now I have averaged out and so on. So that's how it is. So when it is descending, exiting everything is a mistake and keeping everything is also a mistake. But as I said in an earlier call, people try to take extreme decision. The incremental thought is not a natural process in mind. Mind takes to take side, good or bad, beautiful or ugly. That's how it is. So the incremental approach, I think, is the key for trading. And so if it continues to go down, I think this way you see 22K range is the most critical range. 22K range, 21, 22K is the most critical because then it would break the magical line. And we don't want in that to happen because if that happens, that then this is a head and shoulder. This is head and shoulder, and that is bad. Okay. And if that happens, then lower level could be in 4-digit number, not just in 5-digit number. It could be in 4-digit. But remember, we don't have to think about it because the levels are not reached. But just this is for education. Because as a TA, I had to make sure that I think about all scenarios and I have boundaries and conditions. And also I feel responsibility that I share my point of view. But the probability of this is very, very low at this moment. So it's ignorable, totally ignorable. Okay. But we should be aware. Awareness is important. So we can know, we need to know all scenarios, but we need to each scenarios would have different weightage. Right. So the weightage for the upside move is higher at this moment. Okay. We have to watch out for 25K, but the weightage is still higher. Okay. We are kind of in balanced state. We don't have to be bearish or bullish. We'll feel better, as I said, when it breaks above 27K, closes above. Then we'll feel better. Okay. So likewise, and then 29K and so on. So we have those levels. So each level, when it breaks on the upside, we'll feel better and better and think about new all-time high at one stage. And similarly, if it starts continuing to break down, then we have to think that what are the key levels and so on. So we have those levels. So we are just briefly talking about lower side for now. Okay. So this is sometime, we have to balance ourselves. We should know both the sides, what will give us the all-time high, what could give us four-digit number, right? And what is the condition? So from awareness point of view, if we know this, then we always with a balanced mind. Then the emotion will not play a major role if we truly believe in this on this strategy. And to be honest, there's no easy way but to go by this kind of strategy because emotions are always wrong. You must have heard about sentiment related trading, and always go opposite to what mass is feeling. That is one strategy. I mean, that's very vague strategy. You cannot time it, and you cannot find the exact sentiments. But basically, when you are panicking the most, probably that's the most incorrect time. Why I'm saying because those who are driven by supports and resistance, they do not panic. They may get disappointed. So there is difference between getting disappointed. There's difference between getting disappointed, right? For some time, it happens. But getting driven by emotion is where people fail. So be careful. Yeah. So you can see this scenario. Yeah. So we don't have to put a lot of weightage in this. You can go back now. Okay, we go back to a weekly on Bitstamp. So it's still in the green box. Remember, still in the green box. Let's not forget. Okay. Uh, so I believe I covered everything that I wanted on BTC. Let's look at DXY. is very important for us. So DXY hasn't broken critical resistance 105. There's more tolerance up to 106, I would say, the orange box. So this is still a level where it has to decide. I would still emphasize that it could go down and it could go up only if it breaks above this resistance zone. Excuse me. So the next will come to know, but this DXY. But let's look at the low time frame. Look at what happened. So when DXY dump, when the DXY dumped, stand in the morning, my local time. So 2 is 129. Just trying to find the candle. 129. Yeah, 129. This one. So from 9 o'clock, which is like 1 p.m. UTC, it started going down. And that's where BTC, maybe I can do quick comparison by having BTC. You see, um, yeah. Um, Look at this. Now, as I said earlier, you can think this is based on the ETF news. It's up to you. In my point of view, it is about DXY. Okay, so this is not point of debate, but this was about DXY. So DXY started dumping and the BTC started dumping. And of course, the news related to ETF would also combine together. But so it kept on, it was a quick drop, quick up, and then you can see it when it started rising, then it started going down, right? And when it continued to go up, basically from this low to all this way, and then from this one to this one. So you can clearly see now this is weekend, so we don't have that information on the XY, but you can see opposite move, dump, pump, pump, dump. So this is what I wanted to convey. And this is not assumption, this is observation. Okay, so how DXY behaves is going to be very critical. So I'm trying to make a point using technical analysis. So there is nothing, it's not about what I believe in. It's the fact. So this dump was not good for BTC. This dump was good for BTC, right? From DXY. So that's why DXY is super important, because BTC has become extremely sensitive, extremely sensitive. That's why DXY is number one reference data point at this point, in my opinion. Okay. So let's see how DXY opens and Sunday evening, midnight UTC. That will tell us a lot. So I'll continue to monitor DXY. And if you want, you may do that. But remember, I had to highlight that the coupling changes, the relationship changes. At this moment, they are tightly coupled. Means if you twist this and on DXY, you see the effect on PTC. But that may not be the same for longer run. Right now, they're extremely sensitive to each other. I mean, one way. BTC is extremely sensitive to DXY. Okay. Interestingly, Nasdaq doesn't care. It is moving up. It is heading up. So I mean, there's no explanation. Um, Only the buyers would know. The only logical explanation is probably they're anticipating that the XY will go down because that's how it works. Stock market is assuming that these rates Fed will pause. And if you look at the GDP data, so there are mixed data in macroeconomic factor. Let me highlight that the GDP slowed down in the US. So that is good news for the Fed because if Fed can slow down, but then something weird happened. The PC data, the spending data um, were like higher, a little higher. So that's a little concern that people are spending a lot. So in the West, what I'm seeing is the credit amount of credit is going up so rapidly. That's a point of concern. A credit card bill, the balance is going up. The debt on a personal level is going up. So what is happening? The earning with respect to the inflation is not higher actually. They're losing the buying power. But because of their habit, again, this is my personal opinion, based on the data that I'm going to share. That if you look at the credit card balance, that's going up. So they are not stopping this habit. They're not changing the habit. They keep on buying stuff and they're pushing the inflation up. So there is a cyclical effect. We are seeing that inflation is not drastically coming down, and we are seeing more and more pressure because people are buying on credit. It's not that they have a lot of cash. They had cash from COVID, those free cash, they burned that one. Now they are buying more and more on credit. And that's a point of concern. So you can look and Google it. You can search out. You will see the credit at a household income, household credit is going up. And that's not good. So that's a tragedy. What people should do is not they should not buy something which is not needed. And when they do, first of all, they will not increase their credit, and secondly, they will not put pressure on prices because if they keep on demanding based on credit money, then the Fed will continue to go up with their interest rate. They don't understand that. So I mean, of course, so I would individually I would buy only which is must, not something which can be bought a year after. But I mean, what can we do? It's not that people are earning a lot, no, but they're just simply adding more credit. That's not good. Anyways, so because so there are mixed data, and if you know the Fed will decide next month. Um, I mean, the next one is important. Right now, the equity market is assuming that the Fed will pause, and that's why it's moving up. Simple. That's why Nasdaq. Now, crypto is not getting money. Don't ask me why. It's simply there is no money flowing in consistently, and volume is very low. Anything that is pumping is also like very short term, and basically there is no liquidity. It might come, but at this moment, there's no sign. We'll have to see, wait and watch. Okay, I think that's Nasdaq, which is super strong. Now we can look at Bitcoin dominance. Bitcoin dominance, yeah, right. And this you see the effect because of some altcoins are getting stronger. That's why you see the effect. You know. But BTC is still very strong. If you look at it, this trend is still strong. So unless it breaks below 46, 45% dominance, basically it has to enter into this orange channel that you see, this parallel channel. It has to enter somewhere in 45 percentage range. Then only we can say that we will see the rally in altcoin. I'm not saying the altcoin will not go up. What I'm saying the broader rally. which I mentioned last week. Okay, so that's dominance. Yields. Look at this. Yields have are showing. So this could be double top scenario, right? Double top is not confirmed unless it breaks the support. By the way, just to clarify, you cannot say because it retraced little. We cannot say it's double top. It has to break below the support. Then we will say, okay, this was double top. At this moment, we cannot say double. We can say potentially this could be double top, but we cannot say this is double. There's a difference. We cannot say this with high certainty or probability at this stage. But yes, once it reaches below 3.6, 3.5, then we can say that this is collapsing. Then this ugly cycle that we saw, thanks to the Fed's policy or inflation, I would say. You see the interesting part, it started moving up from July 2020 in middle of the COVID because inflation was going up. So though, and we had highlighted, to be honest, I was focusing on this and highlighted a potential top at a very top at 60K, 65K range. In month of November 2020, I had highlighted that it's weakening, BTC weakening, and in December I had called out potential top, very at a right at the top, and that was purely based on bond yields because they were really going up, and household items were going up. Though then nobody was focusing on inflation until Fed started raising in December or decided in December 2021. For 1 year, December 20, in fact, 1.5 years, middle of the 2020 until December 2021, inflation was rising and the Fed was sleeping, did nothing. They should have done something. But the yields were going up, and that was the indicator that something is wrong. So that's why we track yields, very important data point because they tell us about the interest rates. Right? So that's why it's important. Okay. But if it breaks above, remember this can be a consolidation, another leg up like this one. And if it breaks out like this, then there could be another leg up. And that will be the, if that happens, let me tell you, then there'll be tremendous pressure on equity as well. Forget about crypto and equity. Even equity may not be able to hold its price, the stocks. It will be very hard because then we are talking about aggressive rate hike, like what happened in 70s. Aggressive late 70s and early 80s, basically. That's what happened. Okay. So that's why these yields are important to track. So I think we covered all the macro factors. We covered lower time frame, 2 hours, 4 hours, 5 hours, 1 week, 2 week. I have covered the bearish scenario briefly and covered the best practices, the incremental approach. So many topics we covered. I reiterated the emotional factors. I reiterated about the focusing on the present and so on. So I believe that all this will help. Okay. And emphasized on the risk management, incremental risk management is important, not to just sit and do nothing when the key levels are broken, right? That is ignorance. Okay, but at the same time, not to think about extreme scenarios. So basically, if one can make a habit of thinking or planning in an incremental manner, I think that trader has higher probability of winning compared to others. With that note, I would end here and we quickly move into the next session and go through other Part1.